The global economy isn't crashing, it's being deliberately stalled. For months, headlines have cycled between recession fears and resilient growth. But beneath the noise, a single, staggering pattern emerges. Capital on a planetary scale is refusing to move. Trillions of dollars are pooling in the safest, most liquid, and least productive corners of the financial system. This isn't a market correction. It's a silent, coordinated act of economic sandbagging. Consider this. Global corporate cash holdings are at near record highs, while investment activity remains subdued. Money market funds have seen inflows measured in the hundreds of billions. This is the economic equivalent of a fleet of ships dropping anchor, waiting for a storm they can see on a horizon invisible to everyone else. For the regular person, this feels like economic gelatin. Loans are slower, expansion plans are under review, public projects get delayed, the engine of advancement sputters. But if the custodians of the world's wealth are battening down the hatches, it begs a terrifying question. What specific storm are they so quietly, so unanimously preparing for? The trigger isn't economic, it's architectural. The unspoken rule that has governed global finance for decades is being quietly retired. Today, nations are reprioritizing, placing economic resilience and strategic autonomy above pure efficiency. This is the rise of the security premium. For global capital, this changes everything. A factory is no longer just an asset, it's a potential liability depending on which map it sits on. Look at the massive subsidization of domestic chip and battery production. Observe the redrawing of banking networks along new geopolitical lines. These are not isolated shifts, they are symptoms of a system-level antigen response, a rejection of the deeply interconnected model. The psychology here is one of institutional trauma. The pandemic revealed a profound vulnerability. Over-optimization breeds fragility. For a multinational corporation, this creates a minefield of unquantifiable risks. Where do you invest when the rules are being rewritten in real time? This translates to the price you pay. The security premium means higher costs for everything as redundancies are built in. The invisible hand of the market is now being guided by the visible fist of the state, so capital waits. But this recalibration has a dangerous, built-in flaw, one that history has shown can turn precaution into panic. But if the custodians of the world's wealth are battening down the hatches, it begs a terrifying question. What specific storm are they so quietly, so unanimously, preparing for? History offers a dire parallel. The 1930s. Not the crash, but what followed. The global retreat into blocks and the hoarding of gold that deepened the depression. The parallel is in the mechanics of stagnation. Then capital retreated into national fortresses and hid. Today, our gold is liquidity, U.S. treasuries, money market funds, and cash. The hoarding is the same. The asset is different. This creates a perverse, self-fulfilling prophecy. The more capital seeks safety, the less fuel is available for the productive economy. Here is the critical behavioral insight. For massive institutions, the pain of a potential loss far outweighs the pleasure of a potential gain. This loss aversion is magnified at scale. A pension fund manager faces catastrophe for a major loss, but little extra reward for beating the market. The safest bet is to mimic the herd and retreat. This creates a systemic bias toward inaction. The sandbagging is not a conspiracy. It's the emergent property of thousands of rational, self-protective decisions. Where do you invest when the rules are being rewritten in real time? This translates to the price you pay. The security premium means higher costs for everything as redundancies are built in. The invisible hand of the market is now being guided by the visible fist of the state, so capital waits. But this recalibration has a dangerous built-in flaw, one that history has shown can turn precaution into panic. But if the custodians of the world's wealth are battening down the hatches, it begs a terrifying question. What specific storm are they so quietly, so unanimously preparing for? For you, this liquidity trap manifests as a ceiling on your potential. Business loans remain elusive. Retirement fund returns become meager. Economic dynamism slows to a crawl. We are trading potential future growth for perceived present safety. But this analysis misses the final piece. The silent sandbagging isn't just protecting wealth from a storm. It is itself actively constructing the next far more dangerous phase. The endgame of sandbagging is not preservation. it is predation. While the media focuses on interest rates, the real shift is occurring in the shadows of distressed assets. When capital collectively withdraws, it concentrates. And concentrated, patient capital has a historic pattern. It waits for the crisis its own retreat helped engineer, then acquires real assets for pennies on the dollar. We are not in the harvest phase yet, but the preparation is unmistakable. The dry powder is being accumulated. The legal frameworks for distressed asset acquisition are being strengthened. The sandbagging creates the pressure that will fracture weaker companies and over-leveraged nations. The holders of liquid capital will be the only ones with the means to buy. This is the part the daily news cycle misses. It's about the radical transfer of ownership that occurs during systemic stress. The 2008 crisis was the greatest transfer of residential wealth in modern history. The coming shift will be broader. It could be infrastructure, energy assets, or entire industrial segments. For families and workers, this translates to a gradual change in who owns the foundations of daily life. The control over your cost of living and job security subtly shifts. But this analysis misses the final piece. The silent sandbagging isn't just protecting wealth from a storm, it is itself actively constructing the next, far more dangerous phase. The world is fixated on the symptom, the stalled growth. They are debating the wind speed while the architects are quietly redesigning the shelter, ensuring they alone control the door. The silent sandbagging is the prelude to a radical reordering. Because while everyone watches the stagnant pond of today's markets, the real transformation is already unfolding. Not in the flow of money, but in the silent, strategic reclamation of the riverbed itself.